We are feeling a ton of momentum in the Colorado real estate market and even won a few contracts for clients in multiple bid situations over the weekend. Let's take a look at some current events and some financial updates. Between Monday's holiday market closure and the general absence of highly relevant economic reports, it was a fairly quiet week for interest rates in the housing market, but not without some potentially hopeful developments. We heard from multiple members of the Federal Reserve's rate setting committee who basically said they're not reading too much into 1 month of hotter employment and inflation data, arguably the thing, right, that did the most to accelerate 2024's upward rate momentum in February. In the end, rates ended the week nearly unchanged. Now, while this doesn't mean that the Fed is suggesting data will turn around and help rates in early March, it does mean that the market can afford to be receptive to the data if it paints a slightly more rate-friendly picture. That's really important. Either way, early March is a highly consequential time for economic data as it brings all of the reports that have done the most to help and to hurt interest rates over the past few years. Now, just as importantly, all of the data will be in before the next big Fed meeting and announcement on March 20th. The average mortgage rate in January was the lowest it has been in 7 months. I know you guys all saw that and felt that. Home sales rose at their fastest pace in nearly a year. And there is a correlation between those two things. Let's dig in to the three major components of the real estate market. Number one, new home sales. Signed contracts on new homes rose for the second straight month in January, up 1.5% from December and 1.8% from a year earlier. Now, the lack of existing homes for sale continues to boost the new construction market. And a good sign for much needed supply, we saw the National Association of Home Builders recently note that they're expecting construction for single family homes to rise this year. Again, great news for inventory, which you know we need. Number two, existing home sales. While existing home sales are still much lower than a few years ago, January brought a 3.1% rise when compared to December. The National Association of Realtors chief economist Lawrence Yun noted that listings are modestly higher and home buyers are taking advantage of lower mortgage rates compared to last year. Number three, new home construction. Housing starts hit a 5-month low in January as both single family and multifamily construction declined when compared to December. However, again, the National Association of Home Builders expects construction of single-family homes to rise this year, and there are signs to support this. Single-family home building permits, which reflect future construction, were literally at the highest level in a year, up 35.7% when compared to January of 2023. The bottom line is, in addition to more activity, we are seeing lots of opportunity in the Colorado real estate market, and it's getting stronger with each passing week. Now, here's a quick refinance update. If we've spoken to you about a refinance, we're still watching the market closely with rates hovering in the high 6s. We'll continue to keep you posted as we see shifts in the market that may make financial sense for you. And here's the really important note on this one, guys. If we have not spoken yet, and especially if you have a rate higher than 5%, use the link in the description and schedule time with me, right? When rates drop, we know it will be a feeding frenzy, so we need to get your strategy identified and dialed in now. So call with questions, we're always here. Special thanks to Barry Habib and Brian Hale for their outstanding analytics and tools to really help us get an accurate sense of the market this week and every week. We appreciate you so much. Can't wait to help.